Hey there, crypto enthusiasts. I hope you all survived the recent crash on October 11th when $20 billion were just wiped off the market. A huge number of people got liquidated, over 1.5 million traders. I hope you're all okay. And in this video, we're going to break down 3 strategies for making money in the market, no matter if it's falling, moving sideways, or doing something else. We'll always be able to earn thanks to arbitrage. And in this video, we'll go over the top 3 strategies for making money with crypto arbitrage. So this video is going to be as interesting and useful as possible. Give it a like, subscribe, and let's get started. In this video, we're going to talk about 3 strategies. The first is spot plus futures, the second is futures plus futures, and the third is funding arbitrage. These 3 strategies allow you to make money in absolutely any market, when the price is falling, rising, or moving sideways, especially during periods of high volatility, like on October 11th, when some tokens dropped sharply on one exchange while they hadn't yet fallen on another. In other words, we have very large spreads. Spreads are the price differences for the same token across different exchanges. We can capture these price spreads through cryptocurrency arbitrage. Let's break down all the spot plus futures strategies using a real example. We go to the Arbitrage Scanner, Arbitrage Perpetuals, and in the filters we set the strategy. It can be futures plus futures, spot plus futures, and right away we can also select the exchange or adjust various other detailed settings. At the bottom, we see a table with the spreads. And right here, using the spot plus futures strategy, we already have several trades. This one is for the Bake token between the XTGate and MEXGate exchanges. Naturally, what should we do? Where the token is cheaper, in this case on the exchanges listed under buy exchange, we should buy the token on those exchanges because it's priced lower there. But on Gate, the futures price has shot up significantly, that's why we short there. And due to the price difference, we lock in the spread. When the prices converge, we close the position and lock in the profit. Let's go to the exchanges and see if there are any spreads there. In this example, for the Bake token on the HTX exchange, the price is 0.016. Naturally, this is spot trading, so we need to buy on the spot market. Since we're entering a hedged position, we should have the same amount on spot and an open futures position for the same amount. Now, let's look at the Gate exchange. There, the token is more expensive on the futures market, and we can actually see that the price here is 0.0189. Naturally, we short here because the price is higher. Also, the funding is in our favor here, meaning we short and also earn funding fees. Our position will accrue 0.01% every 8 hours. The next funding will be deducted in 6 hours and 15 minutes. It's very important to enter with the same amount and to short with 1 times leverage, meaning we don't use high leverage, at most 3 times, because leverage increases the risk of liquidation. Naturally, we have a spot position, let's say for $500, and a short position for $500. That's it. We wait for the prices to converge when the prices for this token come together, and we've already locked in this spread in advance. The spread is about, let's check the Arbitrage Scanner to see what HTX Gate shows us, about 14%, sometimes 14% spread. Again, the spread can be variable, it can widen or narrow. And at the moment when the spread converges, we need to close our position, simultaneously selling the spot and closing the short at the same time. It's better to start with the futures position. You open the futures position, close the futures position, and then sell the spot. It's best to do all of this with limit orders, especially if you have a large position. That way you'll save on fees and simply spend less of your own funds. Now let's go over the second strategy. This is futures arbitrage. Here, we don't have any spot positions. We go long on futures and short on futures. And it's important for us to find a price discrepancy, where the futures prices are different. That is, on one exchange the token is cheaper, while on another exchange the same token is more expensive on the futures market. Our Arbitrage Scanner has similarly identified a spread between MEXI and Gate. We can see that on MEXI the futures token is cheaper, while on Gate the futures are more expensive, with a spread of about 17%. Let's go in and check. Here is our MEXI exchange. The trading volume here is actually very good. In the last 24 hours, the turnover was $1.9 million. So in principle, you can open a sizable position here. Again, keep an eye on the order book so your orders don't slip through. If you enter with a market order, you'll just take all these small orders, like these ones for $100, $150, or here $200. So the order book is very thin, which means you should enter carefully. It's better to use limit orders if you're trading a large amount. We can see that on the MEX exchange, the Bake token futures are priced at 0.01565. Here, we should go long. Unfortunately, the funding is not in our favor, but it's a small amount, so it's not a big deal. Now, looking at the Gate exchange. Here, as we've already seen, the token is priced higher, specifically 0.0189. The funding is in our favor here. Here, we short because the token is more expensive. Where it's cheaper, we go long. Naturally, the exact same principle applies. We enter with the same amount on both sides. Let's say we go long for $500 and short for $500. When the spread converges, we close the position simultaneously on both the MEXI and Gate exchanges. What else is important? It's important again to pay attention to the trading volume. It's especially important to look at the order book. If the order book is empty and there aren't many orders, you simply won't be able to enter a position. It's best to enter with limit orders and don't use high leverage. This is an absolute must because seriously guys, you could get liquidated. So don't use high leverage and always keep some margin. Make sure you have margin just in case on the exchange so you can close your position if needed. And accordingly, these are the basic principles you need to understand when using arbitrage on futures. Now let's go over the third strategy, funding arbitrage. On the Arbitrage Scanner, there is a tab called Funding Rates. It is completely free for everyone. You can go there and you'll see a table displaying the funding rates. It shows us the token, the maximum spread between funding rates, and the exchanges where funding is available. In this case, for example, the tokens are Cell and Slurf. Slurf is some kind of meme coin. We can see that there's a spread between HTX and Binance, as well as Bitword. Well, these are the popular exchanges, HTX and Binance. Let's go in and see what's happening there. We have a positive spread, so let's go to HTX and Binance and check if the funding rate there matches what's shown here. Let's go. So we can see that on the HTX exchange, the funding rate is 1.12. It's a positive funding rate, so we should be shorting here. If the funding rate is positive, we short. Because if the funding rate is positive, long traders pay short traders. So we work in reverse. If the funding rate is positive, we short. If the funding rate is negative, we go long. If we have two negative funding rates, we go long where the rate is more negative, because short traders pay long traders, and we short where the rate is less negative. We will have to pay commissions, but due to the difference in funding rates, we will make a profit. That's why we need to look for such spreads. Here we have a rather strange chart. For the past few hours, the token hasn't moved at all. Maybe something happened on the exchange. The order book is empty too, as you can see. There are no orders here. Very strange. This is very strange. It's the first time I've seen an order book on an exchange be completely empty. There's just zero, and the chart isn't trading at all. Well, let's take a look at Binance. This is just an example. By the way, this token is also listed on Binance, and it's actually cheaper there. So we have a spread between the prices, and the spread is in our favor. If we short here because the funding is positive, then here we go long. Let's see what the funding is here. It's also positive for us, but because of the spread between the funding rates, we'll be making a profit. Plus, we also have a price spread in our favor. So when the prices converge, we'll earn not only from the funding, but also from the price convergence itself. The essence of the strategy is extremely simple. We need to enter with the same amount on both sides. For example, on the HTX exchange, we buy the self token for $1,000, and on Binance, we do the same for $1,000. So we need to have 1,000 on one exchange and 1,000 on the other, or $500. I'm just using these amounts as examples. We need to be in a delta neutral strategy, and it doesn't matter to us where the market goes, up, down, or anywhere else. The most important thing for us is to wait for the funding to be paid out. For example, on Binance, the funding will be deducted in 2 hours and 9 minutes. That's it. We wait for the funding to be deducted, receive the funding into our position, close the position, simultaneously close the futures here and there. We've received the funding payment, and the essence of this strategy is that it's as passive as possible. You just enter, see the spread between the fundings, open a position, and wait for the funding to be paid out. As soon as the funding is paid, you can close the position. And so the funding that was credited to your position will be your profit. Well, sometimes there are such price spreads, so you can also wait for the price to converge, and when the prices do converge, you also make a profit from having locked in the spread between the tokens. That's it. But in this case, on the HTX exchange, for some reason the token is completely dead. That is, there's no order book here and no trading either. I don't know what happened to this token. Again, this is just an example. There are a lot of other different tokens here. For example, there's the API token. Here, we actually have negative funding, and on LBank it's positive. So look, there we have negative funding. So let's say we go long on OKX, and on LBank we go short. Naturally, we make money because there's a difference between the funding rates. So we've covered 3 strategies. All 3 of these strategies can be used thanks to the Arbitrage Scanner. After all, it helps you find spreads between tokens. There's a tab called Arbitrage Carpaccials. Here, you get token spreads presented in a convenient table format. You just need to go to one exchange, buy at a lower price, sell at a higher price, wait for the spread to converge, close your position, and take your profit. There are several types of subscriptions available on the Arbitrage Scanner. There's a starter, business class, enterprise, and at the bottom, special guru and VIP subscriptions. Accordingly, you choose the subscription that suits you best. Under each subscription, there is a description of what it offers. The most appealing subscription, at least for me personally, is the Guru one, because look, you get access to the VIP chat where people share their signals, where you'll get help, your own personal VIP manager with whom you can have calls and who will also assist you, access to the website, Inaudible 0619, and a bunch of other features. So guys, use the Guru subscription and you'll be set, you'll have the full package. Again, each subscription suits different people. You can start with the basic one, try it out at first, and then if you get the hang of it, you can upgrade your subscription later. For example, right now I'm using the Platinum subscription. It's basically enough for me. There are also a lot of different features: a futures scanner, inter-exchange arbitrage, tons of exchanges scanning spreads for all tokens. So guys, the Arbitrage Scanner is a must-have for arbitrage traders. They also currently have a giveaway for $5,000. Those who purchase a subscription from the business tier and above are entered into this giveaway. Accordingly, the more months you subscribe for, 3, 6, or a whole year, the more tickets you get and the higher your chances of winning $5,000. And on December 31st, which is very soon, one of you will win $5,000. So all the details will be in the description. Check it out. There will also be a promo code for 30% cashback. That means when you buy a subscription, I'll give you 30% back, and an additional 30% per day will be credited to your subscription. So all the useful links are in the description. Dive in, take advantage, and get familiar with everything. Well, I hope this video was helpful. We figured out how you can make money with cryptocurrency. Regardless of market direction, these are daily neutral strategies. This is arbitrage, exploiting exchange rate differences and token inefficiencies. So guys, use this strategy. On our channel, we have case reviews, lots of educational content, and in general, we talk about arbitrage. If you're interested in this topic, be sure to subscribe and leave a like. We'll see you in the next videos. Bye everyone!